Greetings everyone, welcome aboard. Joseph James, May 18th, 2010, schooltrade.com, our live trade and recap. Did you guys know we offer a 90-day money-back guarantee? That's right. Did you know there's literally no risk involved with your advanced membership? For more information about our money-back guarantee, guys, contact our sales team, sales@schooltrade.com, or look them up on Skype. Let's take a look here. 2, 4, 6 total trades today. Now, boy, we almost had a no-trade day today. Didn't look too good here going into about 10 o'clock this morning. That changed, of course, later on this morning, and we really practiced patience. We waited till the end of the morning this morning to really make our money here. We'll go over these trades, you guys, and see here. Total up though, 62 ticks, 580 USD. We had a loss in the euro, so that's why we got that 62 ticks, but a little bit less, of course, than 10 bucks per tick. So 580, another big winning day here in the room, guys. I'll take 580 bucks every single day of the week on 4 contracts. You hit 500 bucks a day on 4 contracts, guys. That's $100,000 a year. We'll show you guys more about that as we move forward, though. $12,500 for the month so far, guys. What a great month of May. What's the most important thing that happened today? Well, there wasn't much news going on today. We're coming off a very choppy market on Monday yesterday. We had a good day yesterday. We made a lot of money yesterday, but we had a very choppy sideways market. We have OPEX this week. Options expiration is this Friday. And of course, that means Wacky Wednesday is tomorrow. So with Wacky Wednesday tomorrow, OPEX on Friday. We'll talk more about what Wacky Wednesday is tomorrow. We'll talk more about what OPEX Friday is tomorrow in the room. But let's start today now with not much news not much news out there today, with some concerns about OPEX week, and seeing as yesterday was a very choppy sideways day, using all that information, let's now start with the dollar first. And the dollar will give us a little bit more direction as far as what to expect later on this morning. Now the dollar, as you can see, we had this nice strong uptrend in the dollar last week. Nice big strong move to the upside. We had higher highs, right? Higher lows. So dollar continued to push the upside. But then here towards the end of the week, we started seeing things flatten out, right? Here's Monday there for you. Monday was sideways. And then Tuesday, you can see here we are. We're still trading inside of that sideways range. So sideways market on the dollar. Now that doesn't necessarily mean very much for us right now. What it means for us is sideways dollar should mean sideways on everything else. And we saw that this morning pretty darn good. What I wanted to look at though here was more of the underbelly of the market. We would call this a market internal or a vital sign of the market. So follow me down here lower right hand corner, and this is my average to range, my ATR on a 2-minute chart. And you can see it's just the average to range. And you'll notice, right, we have these very, very stable lows, but we're making lower highs as the week progresses. So what that tells me is when we opened up our chart this morning, we saw the dollar going sideways. That means the rest of these markets should be sideways. Then we start seeing the dollar, the average to range is the lowest it's been in 2 weeks, which means now the dollar, very constricted, right? Very tight, narrow trading ranges. That's also going to bleed over into the other markets we trade. So what could I have possibly gathered out of this information today? Be careful out there. Be aggressive with your defense, right? In a sideways, choppy market like this, guys, when you see profit, lock it up tight. We're going to show you guys how one of the trades, I think it was the last trade we took today, we used a very conservative final profit target. That way we could guarantee we locked up that profit. Okay, think of it this way. On a trending day, I'm going to let my winners run. Give those stops some room to let the trade breathe. Let those winners run. But on a sideways day, right? A sideways day like this is telling us right now, I'm going to do what? I'm going to take my money and run. Okay, so trending day, let the winners run. Sideways day, take that money and run, right? Lock up that profit, stick it in the yellow account, and don't give it back to the market. That means be aggressive with taking that profit, and don't give the market too much wiggle room there because it will chop around sideways on us. So that's what that told us this morning. And as usual, we're usually pretty accurate in this stuff. Once again, we come out first trade of the morning here on crude. You can see we took 2, 4, 6 total trades. We had 2 losses in there, so we almost really never had today make any money today, but we actually made some pretty good money on it this morning thanks to our patience and our discipline. Now let's look at this market real quick on crude, because this is a great example this morning, and we talked about it live in the room this morning, how we saw this price action step in. Okay, here about 9:30, 9:45 after the 9:30 news. Now, what does this price action show us here? Notice how we're seeing this one tick new lower low as we're chopping down here, right? Very choppy market. Guys, when you see price patterns look like this, that one tick new low followed by 3 or 4 ticks back up, that means there's no conviction in this market. Now, there could be a lot of reasons why this happens. It could be because the dollar's moving flat and there's no range like we saw earlier. It could be because we had a trend line here in our way. That would be good support. That would cause the sellers here to be a little more, concerned about the downward side here. No matter what the reason is, when I see this price pattern like this one tick new lower low, right, followed by 2, 3, 4 ticks back to the upside, we use the analogy of getting into a swimming pool. Right? Anybody ever try to get into a pool that was too cold? Okay, you put your foot in and wow, right, that's way too cold, right? I'll wait. Okay, well, that's kind of what I see. When I look at price action like this, I immediately see people behind the scenes, right, testing the downside, right? Almost like taking a sample. Let's try the downside here. Oh, nope, didn't like that one. Let's back away. Right? Let's try another sale here. Nope, that one didn't work. Let's back away. So that's what it looks like, right? Whether or not you're testing the waters of your swimming pool or the sellers are testing the downside here, that's basically what's happening here right now. So one tick new lower low, followed by 3 or 4 ticks back to the upside, guys. Watch for those patterns. That's always going to be a heads up. We need to wait for a better price action. Now we got our day started off on a good note here. Nice big winner on gold here to get ourselves started. We had our short-term trend up. You'll notice we have the trigger line here sloped to the upside. Now, you'll still see we had a very choppy environment here, right? Very choppy price action here, very choppy all across the board. That 1 or 2 tick new higher high, and then we see that 3 or 4 ticks retreating back to the downside again. Now, on this particular trade here on the gold, 9:45, just before 10 o'clock, you can see how long it took for us to take our first trade of the morning. We really didn't see very much action going on here. But we got our trade taken 9:45 on the breaker. 16.3 was the fill. We're going to break above this level here, right, guys? 15.5 there on the gold. We mark up our swing high, and we break above that swing high. All right, now this was, you can see, a very choppy environment. By the time we got into this trade, it had just shifted and pointed back down. Momentum looked good at the beginning, but by the time we're in the trade, we realized we might have made the wrong decision. Got out of this trade early for a +1 times 3, so 3 contracts. +3 times 4. So it's 3 ticks total times 12, right? Times 4 contracts is 12 ticks or 120 USD. Okay, so once we saw momentum curl, once we saw that all those big buyers, if you guys recall, right, all those big buyers in the tape this morning, but nothing happened, we know at that point, time to cut this trade early, guys. It's simply not working out in our favor. Either we made the wrong decision or the market's not going to give us anything to work with today. Either way, I want to be on the sidelines now. Took my 12 ticks, $120, and hit the sidelines. Next up, we gave that money right back almost here on crude. Now, here's a great example of a back-to-back winning trade, and we'll take a look at this in much more detail here for you. Now, first of all, notice in the left-hand corner here how we had a new swing low here. See that new swing low? That new swing low came down. Now this was called at 10:30 this morning, was called a higher risk breaker pattern short, because you can see we broke down here to that 74.35 level. Then we popped back up, and then we came back down here looking for a breaker pattern short. So that's why it's called higher risk. We did not get the new lower low, right? I would have rather have seen this thing get below that 74.35 to give me that lower low. So a little bit of an aggressive entry here, and it cost me a little bit of money. 46 was the fill for this breaker pattern short. Again, mark up our swing low. Look for the break below that swing low for the breaker pattern short. Again, high risk because we didn't get the new lower low. Again, we saw, of course, once we got into that trade, momentum quickly curled and pointed back up. You can see these candlesticks right here, right? Nice big hammer patterns, right? So the candlestick body at the top, which means price got sucked down, tested my first target, didn't fill me for my first target, or I would have been a winner there, and then got sucked back up. When we saw those big buyers enter with momentum confirming back to the upside, guys, we knew right away, get out of this trade. And at this point, we had really started to be concerned about how this market was really working. The first trade was a little scratch winner because the market was chopping around. Second trade here was a little tiny loss because the market was chopping around. So at this point now, we really wanted to make sure we paid a close attention to these perfect patterns. No more high-risk entries, no more outside of our rules. It's time to really lock down what we need to see to make a trade work, right? What's going to be my perfect pattern? Let's take a look. Now, of course, at 10:49, you can see we made the right decision here on this short, right? The short trade here at 10:33 was the right decision. decision. You can tell that by looking at this move back to the downside. Only thing was we got caught up here a little bit just because of the issue at hand, right? It's just sometimes the market doesn't work out. Everybody takes losses, guys. It's how we deal with them. So we waited for the price to come back down. Of course, we had no idea we'd be only 10